Only a few minutes ago into the start of cash equity trading. Welcome back to Bloomberg Markets Today. I'm Dani Berger in London, and here are your top headlines. European and U.S. futures point lower. Asia equities track Wall Street higher after U.S. inflation figures fuel hopes of a soft landing. The BOJ surprises with a bond buying operation after 10-year yields jump. China's services sector slows more than expected, and manufacturing contracts for a fourth straight month, and another sign the economy is failing to find traction. Plus, the Fed's Neil Kashkari says the U.S. inflation outlook is quite positive, but warns higher interest rates could still prompt job losses. Christine Lagarde says the ECB could hike again, even after a pause. So we've got just about a minute to go. The asset to watch has been the yen this morning after the BOJ stepping in with an unannounced bond buying operation, seeming to smooth things out. The euro continues to gain versus the yen. On Thursday, with that Nikkei report, we saw the biggest drop in the euro versus the yen since March. That has started to unwind itself. But overall, euro flat versus dollar at 110, with the guard warning of possibly more hikes, even if they pause in September. German 10-year yields, those also up by about 3 basis points, essentially just tracking the trade in the U.S. After all of that U.S. data on Friday, we're going to get CPI for the whole of Europe in about 2 hours' time. Meanwhile, crude, that comes in and still trading above $80 per barrel. All right, just seconds ago until the market opens, let's look at what futures are doing. We're mostly lower. CAC may be outperforming. A boost from China is possible, considering all the luxury goods makers live here. FTSE 100 futures, those are underperforming, down about 0.3%. It is a very, very busy week for earnings, the most busy week for earnings in Europe, both in terms of volume and just pure numbers of companies that are reporting. All right, so here we go. We're about to get the market open at this moment. Will we continue to see that downdraft? First out of the gate is FTSE 100, pretty much unchanged, better than what futures were doing. We are just we are exactly flat now, starting to turn lower as more of these markets open. BT, one of the stocks to watch, announcing Alison Kirkby will be stepping in as the new CEO. Still waiting for more stocks to come through. Spain, that falls about 0.2%. Again, we will get CPI in about 2 hours' time. That could shake things up anew. Dollar continues to be the currency of choice this morning. Bloomberg dollar spot up about 0.1% with a flat euro and a flat pound. Bond yields, those move higher on the GMM. 10-year yield jumping about 4.5 basis points. Looks like we've got our reading on France now. That's also unchanged. Will again be interesting to see how the China narrative plays into this. Are we going to get more support to consumers? Does that mean they're going to continue to buy more luxury goods? So that's the read so far. Commodities, those moving higher for nat gas elsewhere, pretty much sour for the day. All right, we've got Italy in 0.02%. So let's now look at the sectors, because, again, individually, the headline's not that interesting. All right, what have we got? Tech, that's down 0.3%. That's interesting because tech had such a strong day on Friday in the U.S. and had a really strong day in Asia, too, unable to sustain itself in terms of the European trade. Food, that's really bad. This is going to be Heineken right here. We're just talking to the CEO. Volumes disappointing after they hiked prices. He maintains that they front-loaded the hikes. They're not going to be as severe in the second half. Even so, again, down more than 1%. A lot of the other beer makers are likely going to be falling in sympathy since Heineken was first out of the gate. Travel, leisure, banks, autos, all of those doing better. Utilities, financial services, industrials, consumer staples, those all trading down. All right, let's now check in on some of our top stories now that we're at the open. Sofia, Horta, Costa joins us from our Markets Today blog. Sofia, we're not seeing a huge carry through from the positive China session. Does that surprise you? Do we need to wait to get more news from China to really get that European market boost?
Yeah, I think we do need more clarity, Dani. And we saw also the Asia session kind of pair some of the gains into the afternoon. I think the key question here is how will China essentially deliver this consumer rebound story? What we got from the NDRC, that's the National Planning Development Committee in Beijing, is kind of more of what has been said over the past few months, a little bit more specifics, but still, what the policy is really focusing on the supply of goods goods, so removing restrictions on car purchases, making it easier for consumers to buy goods, not really on demand. And that is the narrative here. And that's kind of, you know, whenever we see some optimism around China's stimulus, the questions then come a few hours later, like how is China actually going to deliver this? And the only way really economists are saying that China can do this is that fiscal transfer to consumers that they've really not wanted to do. So stimulus checks, anything that really gets consumers spending. And I think that's why we're not seeing that feed through to European markets today.
Yeah, even what we're seeing in Asia, some of that's coming in. I mean, HS Tech's still up 2.5%, so not totally fading, but you do see that element of, yes, we want direct checks. But elsewhere, equity markets have been really buoyant. They've been really buoyant in the U.S. They've been pretty buoyant in the Europe, despite earnings that more than half have disappointed so far. Are we at a tipping point, though, if things are just too good? Is sentiment starting to shift because of that?
I think people are starting to get nervous. Because I think first there was, you know, yes, this makes sense. The disinflation narrative, no hard landing, that makes sense. Let's kind of jump on that. Also, if you weren't positioned in this market and you were missing out the rally in U.S. tech, even in China tech, you know, valuations, that valuation story was cheap for a very long time. And the moment you miss it, it moves so quickly that you're missing out on a significant turnaround in the market. I think now, you know, even when you look at, let's say, the UK, and markets today have been looking at this a lot because there is almost a positive hum around UK markets right now. The FTSE 100 was incredibly cheap. Morgan Stanley said it was the cheapest asset globally a few weeks ago. And some banks are starting to say, hey, this is an interesting market as well. I think that some people are starting to kind of shop around alternatives to expensive US assets. You know, tech is incredibly expensive and no one's hedging that market. We talked about that on the 7 a.m. show, you know. So really kind of a sense, do we need to hedge this? What is the earnings season going to show us about how corporate America is doing, how companies here are faring with a China slowdown and also a US slowdown. But also, you know, let's not forget central banks, the big theme still of the week, and I will keep saying this every time I talk to you, Dani, BOE. I think that is the key risk for markets going forward, and let's really kind of hone in on the point that that's not a done deal, 50 basis points or 25 basis points.
It's interesting, though, because looking at the UK, quants have yelled at me in the past for saying no one wants to buy UK stocks because they're concerned about the UK story. Well, UK, to a large extent, is a global market, but of course that means it's very susceptible to moves in sterling, moves in interest rates. So at what level does it get cheap enough that people buy? I feel like that's a huge question here, because still, even so, it does feel like there's a political premium or lack of political premium priced into UK markets. So how are people thinking around UK stocks and a BOE decision?
Yeah, exactly. And is it a macro play, or are you actually looking at earnings?
Yeah.
You know, because if it's a macro story, and as you say, the political premium, the volatility story here, and also policy, not premium, discount, you know, can you actually look at valuations? Does that make sense? Because that's all about corporate earnings. Banks are faring a lot better than expected. I think that was a relief for the market last week, a huge constituent of the FTSE 100. As you say, you know, it's not just a UK story. It's very kind of geared to China growth because of the mining commodity sector that we have here. So it's not very much kind of under the UK control. But that policy premium, that policy discount, we keep saying premium, Dani.
I honestly forgot the word discount.
Discount. There's a discount
If you want to know why I didn't say it.
There's a discount in the UK. You know, really look at sterling, look at rates. Huge volatility there. We had a great story out of the weekend from our UK rates team looking at how, you know, even though the market is positioned for a 25 basis point hike this week, there are risks. The 50 basis point is kind of a specter over the market, and Wall Street is warning that, you know, let's do not position just a one-way bet here. So I think it's a really interesting market right now.
Sofia, thank you for fixing my Monday morning brain. Definitely needed that. Sofia, Horta, Costa there from our Markets Today blog. Thank you so much.